Welcome back. As you can see, Ed Conway has joined me here because the yield on the government's 30-year bond, one of the best measures out there for long-term borrowing costs, nearly hit a 27-year high yesterday. So Ed's here to tell us more about this. But this actually has been long since planned. Yesterday's a sort of convenient peg.
Yeah, it's worth doing an update. Every so often, an update on kind of where we are with borrowing costs. It just
you can always come and talk about bond yields with me.
Thank you. No, I know how much you enjoy talking about bond yields. We've got lots of bond yields coming for you, Wolf. I think the thing is, yesterday, I mean, if there's one thing that's slightly scarier than markets kind of lurching around, it's when you're not entirely sure why it is. And actually, it wasn't like there was lots of news yesterday. However, what happened was the 30-year bond yield. Now, and you know, I guess we're all a bit more familiar with these things. This is the government's rate of interest, how much it's, it's kind of the most equivalent thing to it is kind of mortgage rate. And that, went up obviously during the mini budget. And so that was the kind of moment that everyone got quite nervous about what was going on with the UK's borrowing costs and what that meant in turn for the rest of the financial markets. So we saw all sorts of chaos around then. But the striking thing is, since then, this line has crept up and up and up. And actually, if you look at it now and kind of draw a line back, I mean, you have to go back in terms of the close, the end of day close. It's the highest since 1998. It was slightly higher in April for a moment, but nonetheless, we are talking about getting on kind of unprecedented, certainly in the last few decades, highs in the government's rate of borrowing. And of course, when that gets higher, interest rates go, the interest kind of burden for the government goes up. So it's having to spend more on that. And indeed, we're having to spend more on that. And indeed, it kind of has other implications. And so a lot of people kind of are wondering, why is this happening? The Bank of England's cutting interest rates, so their interest rate is going down, the one that we're familiar with, that's going down. Why is that one going up? Is it just the UK? Are other countries around the world facing this as well? And the kind of short answer to that is kind of yes and no. If you look, what I've got here is that red line is still the UK. This kind of area is where the rest of the G7, except for Japan, are. And I think the striking thing, Wolf, to look at here is, in a period kind of around the pandemic, and actually for kind of quite a few years before that, look at where the red line is in relation to this area. So that's the highest, the lowest within the rest of the G7 minus Japan. The UK was kind of middle of the pack. And then suddenly, around the mini budget, it kind of goes up above the rest of the pack. And that's the kind of moment everyone was concerned about. But since then, look at that red line. It's been higher than the rest. And now, I think the worry that people have at the moment is, look, we're a real outlier here. So our interest rates are going up higher than most other countries around the world, even though their lines are going up as well.
I might be preempting a chart that you've got to come, but I think just to add the one extra point to add on this, ours is doing that here on the 30-year chart, which is perhaps the most important for government borrowing, at a time when the Bank of England is moving in the opposite direction on the shorter end. So the sort of one part of the yield curve you can control is coming down, and yet the longer part, the more important part, is rising during that period of time.
You're throwing out my order, because I did have a chart on this towards the end. I've got a chart. I'll go to it. We're going to roll with it. Because you're right, interest rates are coming down. And actually, if you look at kind of the 10-year bond yield, which is kind of also kind of maybe reflecting that shorter end a little bit more, that's coming down as well. Worth saying, though, I think one thing that, this might be a little part of the explanation. It's still a bit of a mystery. Like everyone I spoke to yesterday was like, we're not quite sure why this is happening. But maybe part of it is the fact that back in July, it looked like interest rates in the future, that's the forecast, so the next, or rather what the market thinks is going to happen, they thought it was going to coming down kind of that quickly. If you look more recently, so just the last a few days ago, that line is getting higher. So people still expect interest rates to go down. They're just not going down as quickly in the UK as was previously thought. I think the other thing, which is a big part of this, okay, well, now I'm going backwards, so we're all over the shop here. I think the other thing, which is hangs over everything right now, and you saw that all of those lines were kind of going up a bit, but the UK was slightly more than the rest. This is just a measure of uncertainty, policy uncertainty. The higher these lines are, the more based on what you're seeing in newspapers, people are talking about these things as being of concern. That obviously is the US election. Just look at what happens to these lines after that. So you've got policy uncertainty, particularly trade. So that red line is trade policy uncertainty, people not knowing what's going to happen with trade policy. We know we're in that world right now with a trade war. These lines, many of them are basically at the highest level that we've seen, in many, many, many years. So that feeds into it. People are less keen to buy government debt when they are nervous, so they go and buy other things. They buy gold, they buy other assets. And I think there's another kind of deeper concern, which is our governments, particularly kind of Western governments, just borrowing so much. So we know we have a UK story here, and the government has, done all these U-turns. It has to try and find some money to sort out its finances. But across the kind of developed world, this is just showing you how rates of public and private debt have changed in recent years. Okay, so this is public debt. That one's public debt. That one's private debt. And the key thing to note here, Wolf, is look, they were more or less in line with each other since 2000. But look at what happened since then, okay? So private debt has gone up. This is debt, in the private sector, so mortgages, everything else. That's gone up. But look at what's happened to government debt, the red line, okay? Just look at how much higher that's gone up. So you've got this period where governments around the world, that's the pandemic there, but nonetheless, it's been this constant going higher and higher and higher. Governments around the world are just raising their debt levels far faster than private business. And it's the UK, obviously. We've seen our government, our year kind of national debt go up a lot. In fact, every year they say it's going to go down and going down and down, and in reality, it actually kind of keeps going even higher. But it's not just the UK, it's other countries as well. If you look at, for instance, that's where our national debt is going in the future. Germany is obviously much lower. Germany, they've just got this history of not really borrowing so much. But look at France. France's deficit is going up even higher. This is the national debt. Look at the US as well. So I think, there's this kind of broader thing, which is, are people, are investors around the world just really concerned about governments borrowing loads of money, not really having a plan to pay it back? And then on top of that, the problem for the UK is kind of since 2022, since the mini budget, we've been the ugly duckling. So anytime people are nervous about what's going on, they pick on the UK. That's, like I say, that's one theory. None of this helps Rachel Reeves. It still means she's got a big hole to fill, and there's much more pressure on her than before.
And the hole, I guess, is, if we have more moves like yesterday, getting bigger. A much bigger influence on what she's got to spend are those long-term borrowing costs, as opposed to what the Bank of England's doing with the short-term borrowing costs.
Yeah, the hole gets bigger because you have to spend more on interest costs. And so far, we still don't have a plan from the government. And I think that's going to be the interesting thing to watch in the coming months. As people come back from their holidays, what does this mean for the government's plans? What does it, there's all this speculation. Are they going to do something with council tax? Are they going to do something with property taxes? We don't really know yet.